from a perspective of today, as was mentioned, I definitely will be hitting on business readiness for central banks, although I do want to say that some of the discussion, the discourse, some of the content obviously can be applied cross-industry sector as well as from an organizational perspective outside of the central bank arena. Let me forward these real quick here. Sorry about that. So for today, a little bit about myself, Troy Campbell. And as was indicated, I am basically currently employed by the Federal Reserve Bank through Chicago, Illinois. So as you've heard, just a great area to be involved in quantum. And my primary role at the Federal Reserve, yeah, exactly. My current responsibilities, I'm responsible for the technical execution for strategic and emerging transformational initiatives at the bank. And so bottom line is I want to actually hit on central bank value creation for those of you, just very high level contextual, because I am going to use this as a key example moving forward in our discussion. And then I want to really dive pretty quickly into central bank quantum impact to value. So I call these the quantum impact zones, or QWC for short. And then I want to kind of tie it all together at the end with regards to, it isn't a formal framework, hopefully it evolves into that, but really the type of approach from a business corporate perspective from a standpoint of how do we get ready for quantum, especially in some of kind of trying to demystify this within our business organizations. It's kind of tough. So I'll hit on some of those key elements there. One thing I do want to put out as a disclaimer as an employee of the Federal Reserve, these are my viewpoints only and aren't necessarily representative of the Federal Reserve System or the Federal Reserve Bank of Chicago. So I got that one out. All right. Exactly. So let's talk a little bit about contextually. Again, I'm going to use just a general context of central bank and central banking. Central banks are basically public institutions that have been created to manage the monetary ecosystem in promoting financial and price stability. Central banks tend to function under these mandates, so really to promote maximum employment, to also achieve price stability. And the way we do this is through a few different instruments or mechanisms. One, as you probably heard yesterday, is through short-term interest rate changes or adoption. And in the Federal Reserve, we call those the federal funds rate. And that does influence the longer-term moderation of long-term interest rates. But there are also some other types of instruments that central banks, and in particular the Federal Reserve, use. From a monetary policy perspective, we do control the money supply, and then we do have open market committees that are actually trading government securities. The other piece is supervision and regulation, which we'll hint on a little bit later here, but supervision and regulation of financial institutions, which is a key portion of the value that we provide to not only the national economy, but on a global economic scale. And then last but not least, financial services, which we have quite an extensive payment channels and payment networks that we run for basically external entities. And so that's going to figure into the conversation here moving forward. So again, some really key value areas and some areas that we need to discuss from a quantum impact zone perspective, and then how are we kind of approaching this within the central banking areas. Any questions, by the way? We can make this as interactive. Any questions?
So I have a question. So in this currently, I know you're doing the quantum. So is this at a concept level, or do you find the use case from the Federal Reserve Bank where you're actually going to implement something, or you're just in the evaluation stage?
So we're in the, I would say, as much as I can say, we're in the evolutionary stage. So this is a little bit conceptual at this point. So, but we are, which I'll point out, like the whole encryption discussion, which we've heard immensely about post-quantum cryptographic resiliency. We, like other organizations, obviously, and that's part of the discussion today, is that's taking a lot of the limelight from this whole, I guess, expansive quantum technology ecosystem piece. And I think it's getting so much hype that we're kind of losing sight of some of the other quantum impact zones that are opportunistic moving forward. And we really haven't addressed those from, I would say, an agile strategy perspective, even though not only us, but some of the organizations have done design thinking. We have our use cases, we think. We may not have them all, but we really, that's part of this is, not only within our organization, but even on the street, we have, I think, the opportunity to bring this more into an agile, strategic corporate business perspective. And I think that would help a lot of us, not only in our engagement and our partnerships, but just overall, where are we going in the next 6 months, right? So anyway, so here are some of the quantum impacts to central potential, I should say, potential. So these were just, I'm going to run down these real quickly. If anybody has any insights or questions, again, this is a dialogue. So yeah, go ahead.
So representing one of the people trying to build the quantum computer.
Yeah.
So representing, from this side, one of those who are trying to build the quantum computer, it seems like there's a huge gap between the first and the rest items there.
Yeah.
So if I would be a bank, I would consider only post-quantum algorithms, because that's the biggest real threat that's approaching.
Yeah.
And much of the rest is so far that it's borderline or not borderline hype. That's
some of, no, that's a great point. And that's some of, I think, within the corporate settings, something that we're grappling with every day, especially for some of us who are on the science side, on the business side. And actually, how do we sell this, to be honest with you? And how do we get a valid business case? And I agree 100%, is we're in different parts of the maturity of not only the development of the technology and the prototyping, but how does it impact these areas? And I'll give you a couple examples that were kind of interesting as we went through our own design thinking sessions around, hey, how can we work with quantum? At what point are these at the maturity levels, these domains of quantum from a quantum ecosystem perspective? But definitely the encryption is a huge standout. It's getting all the press. But what's interesting is with the cryptographic agility discussion is this is something we should be doing anyway. This isn't quantum enabled. Okay, this isn't the quantum enabled like the quantum key distribution with random key generation through quantum sensing. We haven't even started to address those as to a pure quantum play here. This is just something that we should be doing even from a classical perspective. So I would challenge that, hey, we should be doing this anyway. If it helps us with quantum moving forward and, and giving us some resiliency against, the execution of Shor's algorithm, then that's perfect. Just real quick, and I know I don't have a lot of time, but economics as a science. I mean, at some point, and again, it may not be a pure quantum play, maybe it's a hybrid play, right? So that is also should be part of the strategy, because even if it's a +1 on the continuum of classical compute, we may have a huge advantage there, right? And so I'm not sure where these are going yet. That's part of the strategy that, like, we and other, I think, banks and organizations need to grapple with moving forward. But economics as a science, that could be totally change the dynamics, either hybrid or pure quantum play just there. Fraud detection. Can you imagine in a financial services ecosystem how important this is for fraud detection? Regulations, policies, and standards that's a huge discussion, not only when you're talking about as a regulating entity. We do have entities that we regulate, like JP Morgan Chase and these member banks who have been at quantum for a long time. They're developing quantum algorithms around optimization. What happens if the entities you regulate are out in front of you as a regulator? That's a huge concern, I would think. Supervision, Do we have a custodial aspect to go out to those banks or financial institutions that we supervise to make them aware, to engage them? Maybe they're not even thinking about post-quantum cryptographic resiliency at this point, but as part of our custodianship, do we have an opportunity, and are we gonna, doing the right thing to step forward there? And on down the line, payment channels, trillions of dollars a day going across payment channels. I mean, what more do I have to say, not only on the encryption side, but also on the sensing side? If we could get more timely or accurate payments and payments data, would that transition into any additional value, correct? And then, and then how does this complement, we know our data, our ML, our AI strategies need to potentially complement this in a hybrid or a pure play way, right? Moving forward. I know I'm running up against time, but, sorry. No, going the wrong way. Okay, so this is going to be my last slide. So this is more thought-invoking, or it's intended to be more thought-invoking. And so this hopefully could be a framework, right? Eventually a formal framework. I'm not saying it has everything. A couple key points. Formulate your corporate quantum ecosystem strategy. Again, I think there's a huge opportunity here across the corporate enterprise landscape. Now, one thing that I found valuable is if you take a design thinking approach to your designing your strategy, it's more human-centric and more problem-focused and more challenge-focused, and you get into the more product-focused areas of your value propositions. So I think that's going to be a key one, is to get the human face behind your quantum strategy within the organizations. And that does include defining your use cases. Back to the earlier question, and maybe one use case is a higher priority because you're at that maturity level within the quantum, design, development, and commercialization phase. But again, your corporate quantum impact zones, based on your use cases, are you impacted now, 6 months down the road? Do you need to reevaluate this 6 months down the road? What are we thinking here? And then I'm not going to go through each one of these, but these are just areas that central banks probably should consider, or their organizations, as we're going through a very similar exercise to this on whatever frequency that we think is viable for our particular competitiveness or business or threats or whatever. And some of these, like I said, the impact zones could be opportunistic, or they could be putting us at risk. And obviously that's going to put a much different prioritization potentially behind that. So I don't know if I have time, but any questions? So. Sorry.
Yeah, we have 2 minutes.
No, because like the bitcoins of the world or the cryptocurrency,
Yeah.
they're also based on asymmetric algorithms.
Correct.
So are you guys thinking about securing those somehow?
That needs to be part of the strategy moving forward. So I know I just reviewed a paper across something similar to that. But yes, with the whole blockchain distributed ledger, with asymmetric public key encryption, yes, that is a huge impact, but it's not just our impact, it's for the crypto world. Now with our new FedNow payment system, I'm sure that, yes, we should be looking at that moving forward. And it probably will be as part of our post-quantum cryptographic strategy moving forward.
Yeah, because we don't even know who owns the cryptograph.
100%.
The Bitcoin.
100%. But as you heard later, there's the gather, decrypt later, and then obviously data in transit, data at rest. But then also, you can think about the blockchain and even that with digital signatures too. So when you group all of these together, just doing your cryptographic asset inventory, could take you a while. It depends on the organization. But again, contrary to, this isn't necessarily a quantum threat. It's being noticed as a quantum threat, but we should be doing this anyway with, cryptographic agility and being able to manage that just for classical, putting our classical algorithms in a safe environment too. Anyway, yeah. Anyway.
Question really fast. So I just want to, I've noticed from the discussions that I've been a part of that banking is probably at the forefront of like quantum algorithm generation, et cetera. And they're even venturing into like quantum key distribution with the regulations advisement coming from NIST, I think in 2022, which advises against kind of these next gen QKD and advises towards post quantum cryptography. Do you see banks as first movers in the space? Do you see them aligning with governmental regulations and helping to advise that going forward?
Most definitely. So we're involved with NIST. I'm actually on the X9 kind of discussions too. Yes, I mean, from a security perspective, yes, I think all of you have that. Now, again, we're a bit risk adverse too. So quantum key distribution is still in kind of its infancy. So I don't see us, and again, this is just my opinion only, I don't see us moving to that. If anything, we're going to do the more classical approach to cryptographic agility, probably. But again, I think that's what you're going to find within organizations, whether it's quantum key distribution, quantum random number generation. Those they're not new enough. They haven't been field tested enough yet. I would recommend to, at least I think that's our position. So
Thank you so much.
hopefully.
Awesome.